All right. So as discussed yesterday also, this P3 we are totally seeing in perspective from our case study, DAISTRUK, logistic company. Okay. Every chapter, every section, we are just looking how it will help us to do better risk management for our company. We are not going into detail. We are not planning this for writing a P3 paper in normal or FLP or anything. Okay, mostly from the case study perspective. So we have seen chapter 1, which was introduction to risk. What is risk? The type of risk. Chapter 2, how we can manage the risk, like we can use TARA model: transfer, avoid, reduce, accept. Chapter 3 was strategic risk. Whatever strategy we'll choose, right, it will have different level of risk. For example, if you go for market development, we have a different level of risk. Let's say political, legal, credit risk. If we come up with a new product, it will be a different risk. Sometime if we diversify and going into new industry, that will have a different risk. Strategic risk. In chapter 4 was about reputational risk. Reputational risk is nowadays is very important, because even a small issue when put on social media is getting very much highlighted. You must have seen a lot of time on LinkedIn and other social media platform, companies like Uber Eats, Zomato, and other food delivery companies. Even if they are delaying, people are just tagging them and saying, you guys are not professional and things like that, which have been followed by millions of followers. So definitely it's a reputational risk for the company. So there are still some companies who don't want to be on social media. Why? Because a lot of people can come tag them, and so there are advantages of being present on social media or not. Okay, advantage and disadvantages both. That also we can discuss. So today we'll be starting chapter 5, that is corporate governance. Okay. So firstly, what is corporate governance? What do you understand? If I ask you to tell me in one line, what is corporate governance for you? Can anybody try? What is corporate governance? Just in a simple understanding.
For me, corporate governance is more of a structure and the standards that we lay down for the organization.
Okay. Why you need that, Swas? You're saying the structure that we laid down. Why you need that?
Oh, sorry, I just mentioned the meaning. So why we need it? Because in order to have everything in line, so if we have a good, proper standards and way of working, and we have a structure, so the we can expect our employees and internal stakeholders can perform according to those standards. So the risk will be minimized, and things will be in a structured way.
Okay, very good. Anybody else?
So corporate governance is a system in place within organizations to help manage resources most efficiently and effectively by appointing people who have oversight responsibilities over certain areas in the business to keep the business in check all the time, obviously in the interest of shareholders.
That's true. Para, Vishal, anybody want to add something?
I guess Emmanuel and Suhas have kind of covered it. I mean, if you wanted to put it simply, it's almost like a rule book, if you want to call it that, a list of or a set of sort of processes and understanding that how the company operate. To a degree, it could be a performance measurement also as to how they measure specific things or how they're achieving their goals.
Right. Okay, so basically corporate governance, we can even divide this two words. One is corporate, another is governance. When you go and talk about governance, governance is like governing, making things into operation or execution of the things. Governance can be part of the government also. Anywhere when we are having a system to do work in certain way, that is called governance or governing. Okay, then we talk about corporate business or entity, whatever you call it. So basically, governing of a business, running of a business, governing of a corporate, it is corporate governance. That's the simple word meaning of it. Okay. Secondly, what is the reason of it? Obviously, we are studying this under P3. Our topic is risk management. So we are doing corporate governance for risk management. We need to manage the risk, right? And if you govern it properly, definitely it will be a better way of risk managing than making them do everything on their own, or basically having every company their own way of operation. Basically, corporate governance is applicable mostly, or we can say it's applicable for the listed companies, though unlisted companies can also have their corporate governance, their board of directors, their own risk management, but it's not mandatory. Mandatory as in following the rules and regulation of the corporate governance. Like for example, in the UK, we have Financial Conduct Authority, FCA. So the corporate governance should be according to the FCA. Like in India, we have different. In UK, we have SEC. So all the places it will be different. So primary reason of corporate governance is risk management. Okay, therefore, in our pre also we see mix of executives and non-executives. We have different committees. They have a lot of roles to improve, to control, to contribute, but the primary reason is to manage the risk. All right. And we have seen a lot of examples like 2008 financial crisis, and a lot of time when company collapse, one of the reason turns out to be poor corporate governance or no corporate governance, no proper corporate governance. If DAISTRUK want to be successful or be sustainable business, just like what we have done in last 6 decades, we have to have a good corporate governance. It is something like which is must have. Okay. If you go by the definition here, they are talking about the system by which companies are directed and controlled in the interest of shareholders and other stakeholders. Firstly, it should be directed what to do, but after direction also, we are not giving them autonomy, but it should be controlled by your own policies, rules, regulations, and everything. Some of the rules and regulation will be set by the government. Some companies can decide internal. Okay, so they have given a lot of things here. We don't need to remember all of that for an exam. Just some basic points we have to understand, especially the committees. Anyways, before going to that, we can just see quickly what is the importance of it. Listed companies are required to operate system of corporate governance. Why? Why only listed companies? Because when we become listed, we are taking public money. So when we are taking public money, it's government responsibility to safeguard the interest of the public. So therefore, government comes in through their association and put the system to follow. Same, second point also same, the requirements are often given the support of the stock exchanges. Third, the development of corporate governance code is closely associated with UK, hence the UK is useful model for our exam, obviously. The UK corporate governance code follows principle-based approach. Okay, so there is a difference between principle-based and rule-based approach. So principle-based approach is something like you have to follow. If you are not following, you have to explain, or we can just say comply or explain. For example, for all listed company, internal audit is mandatory. But being a principle-based approach, DAISTRUK can say, I believe that we don't need internal audit because already we have risk management team. We don't see that much risk in our business. Everything is okay. There is no fraud coming up. We are not having issues every now and then. So it's fine. If they give legitimate reason, it's fine. Though DAISTRUK, I don't believe they'll have a legitimate reason to give when they are such a big company and operating from so much time and with that much level of what I say dynamics. Okay, but when it goes to rule base, another way of governance is rule base. The US is an example. You have to comply or there will be consequences. There is no gray area. In principle, you comply or you can explain. If you explain, there will be no consequences. But when it's rule based, if you don't comply, there will be consequences. I hope that's clear. Okay, next is it should be appreciated that corporate governance has links to risk and internal control. So when we talk about unlisted companies, when there are unlisted companies, still they are doing corporate governance. They are following it, whatever works for them, having NEDs, then having audit committees, having risk committee and everything. Why? Because this is helping them to maintain the risk profile, maintain their internal controls, ultimately achieving the effectiveness, ultimately achieving their corporate goals. Okay. While good corporate governance cannot stop company failure, remember there are a weakness of corporate governance. What can be the weakness? It will not motivate or it will not guarantee you taking a right decision. It is just helping us to reduce the downside risk. If the management is of not good quality, they don't have experience or expertise in that, they will end up failing. Corporate governance cannot help them. But it's a major help in well-run companies tend to achieve their objective. It is less risky way. As a result, it is part of risk reduction. Okay. There may be some other importance also we can talk about. For example, it will improve our reputation. It will create more transparency with the shareholders, other stakeholders. It will help us to raise finance easier. When I say easier, compared to unlisted companies or compared to companies who don't follow corporate governance. However, there can be some disadvantages also. There will be a lot of scrutiny, lot of legal things and regulation things to be followed. That's the reason a lot of big companies don't want to go for listing. If you talk about big fours like Deloitte, EY and all, they are big enough to go listing, but they are not choosing for it. And there are other big companies also. Why? Because they don't want this lot of scrutiny and regulation to be followed. All right. Next is development. So development has been happening in 80s, 90s, and a lot of changes happening in 2008 financial crisis also. And still till date, things have been evolving with the time, because the management and other people are seeing new risks, so they need a new way of managing risk. And obviously with the technologies coming in, the way of working is also changing, so the way companies manage risk should also change. For example, now there is one new issue going on globally, is moonlighting. I hope all of us are aware of this. So recently, companies have started a new internal control. They will just call the employee, I think 90 minutes or 120 minutes before, and come to their home and see their place of work where they're working. Because many times it has been seen, especially IT employees, they're working two jobs simultaneously, or sometimes they are doing one in the morning, one in the evening. The fact that they work in the evening under the moon, therefore the name came up as moonlighting. So is that given in corporate governance to do and go and do the cross check? No, but things are evolving under the internal controls. Internal controls, again, it will go to the risk management. Any questions in that?
Nope.
Nope.
Okay. So what it talks about is what principles will follow, how our leadership is. There should be a division of responsibilities. There should be three primary committees. First is remuneration. What is remuneration? Anything to do with the payment, whether it is in terms of direct salary or indirectly with the insurance, or you're providing them accommodation, giving them car or other perks. Audit, risk and internal control through our audit committee. And it is advisable to have risk committee also, but it's not mandatory. If we have risk committee, it's well and good. So that's a good thing for DAISTRUK. Then another important committee is nomination committee, because we need people to replace the seniors when they retire or when they switch the jobs, or if there is any uncertainty coming up. Composition, succession, and evaluation. These are the primary things of corporate governance. Through this, they are managing the risk and they're helping the company to achieve the objectives. The first and most important thing is division of responsibilities. In a lot of companies in the past also, when they fail, one of the reason was overpower. One person was overpowering the entire organization. Why? Because that person was the CEO also and chair also. CEO is the head of executive, chief executive officer. Chairperson is head of the committee. Chairperson is usually non-executive directors. Non-executive director means that person is not involved in the execution part. Imagine the same person is head of the board also and head of the execution also. So if that single person become unethical, or despite being ethical also, despite having good sense of working, being ethical also, there may be some problem with the ego issue, or a lot of other problem can come in, or maybe overpower and taking a lot of decision based on his or her passion, which may or may not be good for the company. So therefore we want the distribution of power, therefore we divide the responsibilities. However, in certain cases the chair and CEO can be same only for limited time. If there is somebody has left and they cannot replace immediately, so for certain time that person can be there. However, that is not the case for us in DAISTRUK. We already have a chair and CEO which is separate. Can you quickly tell me what is the name of a chair and CEO and what is their background?
Malbeen Malaika, she was a junior railways minister who's retired and is now teaching a course in the local university.
And when did she join DAISTRUK?
2020.
She joined 2020. Great. Then who is the CEO?
Henrik Göding.
Okay, what's his background?
So he joined in 2016. He's pretty much from an IT industry, and he has worked within the industry itself. So he's a homegrown. So he has started his career with the senior manager, then to CIO, then CEO. And in the current scheme of thoughts, he'll be very helpful looking at the technology development that we are into in DAISTRUK. So
very good. Yeah. So now they have given the division of responsibilities, which we have discussed, kind of discussed already in the pre-scene analysis. The chair should be responsible for the board meeting, setting agenda and all. Usually this type of detailed question is not asked in your exam, case study exam. The reason being because it is already tested in the individual papers. So it doesn't make sense. They are just asking on major issues, not on the detailed part. Okay. Yeah, one thing we have to remember, when there is ethical issue or reputational risk happening or anything, the CEO is the face of the company. If the CEO is delivering the message himself, it will make a difference rather than any senior manager or somebody going on to the public. Then we have non-executive directors. What is their role? Their role is to scrutinize. Basically, executive directors and everyone is responsible for shareholders and other stakeholders. But for NEDs, they are here to safeguard the interest for only shareholders. So their primary responsibility is towards the shareholders. In fact, they are the watchdog to see if the executives are working for the beneficial of the company, not for their personal benefit. They are not giving over remuneration. They are not taking risk lightly and all of this. Therefore, these people are heading the committees. Okay. What is expectation from them? They should be effective. They should be well informed, basically contribute to the board. Reasons for NED's independence. They should be independent also. Independent as in they should not be part of our supplier. Let's say somebody is a CEO of a supplier and become NED for us. So definitely that person can have conflict of interest. There are certain things they have put here to avoid the independence. Let's say if you're selecting a new NED, so that person should not have a business relationship with the company in the 3 years. He can be a part of suppliers team, but there should be a cooling period of 3 years. Should not be our ex-employee. Again, more than 5 years is okay. Cross directorship with other company stakeholders. Receive remuneration. So usually these NEDs don't work for money. They get very minimum amount just for attending this. And usually these people are well accomplished. They must be CEO or retired people who are already successful. They should not have a close family ties with the directors. Maybe somebody is, husband is executive directors and now wife is NED. So like this should not be there. Should not be a significant shareholder. Primary is fine. If you see, most of the time they're using the word material significant. Reason being, because directly, indirectly, minimal shareholding or minimal business relationship can come in. Let's say if somebody selected a Coca-Cola board, so that person must be drinking that cold drink. We cannot say it's a business relationship as a customer. That's very minor or negligible. Served on board more than 9 years. So this point is important. Therefore, I was asking when did they join? If somebody is in the board for more than 9 years or around 9 years, we should look for replacement. Why? Because we need somebody to come up with a fresher perspective, to understand things in a better way. Okay, and we also believe that things will change in the market every few years. Okay, and that doesn't mean that that person should work for 9 years. Every year that person is evaluated. Maybe in 4 or 5 years only they will be let go. If they are contributing till 9 years, is okay. And in some special cases, if we believe that we cannot replace this person is like expert. Let's say we got Elon Musk as a NED. So you can say, okay, in certain conditions, that person can stay for more than 9 years also. And what is the roles and responsibilities for them? They should contribute in developing the strategy. Here we are saying that they should be effective, well informed. So obviously, if they are well informed, then only they can come up and contribute to the strategy. They should continuously develop and refresh their knowledge. Because what happened most of the time as an executive, we are involved in day-to-day operations. We'll always have inside-out view. So we need somebody from outside to come and tell us and have an outside-in view. They should scrutinize whatever is going on in the business. People role, decide remuneration for the board, ensure succession planning, risk role. So basically this people role or remuneration role, risk role is all done through the committees. Any confusion here?
Nope.
These are all logical points. You don't need to remember it, but just understand. All right. Secondly, sometime in exams, they'll ask the question, there was some major risk which was not put in the risk register. Now the question says, should we blame the risk committee for this? So whenever they use the word from should, it's a discussion question. You can talk about some, favoring that and some against that statement. But however, we cannot blame anybody, because even these people, we are expecting them to be professional, putting and refreshing their knowledge every time, scrutinizing. It's almost impossible to jot down or list down all the 100% risk. Having said that, we should be more careful in deciding the risk, and we should always question their commitment. When the review is happening at the year end, that time this issue can be raised. But in your answer, try avoiding blaming an individual person or a committee, unless it is something to do with ethical or fraud. You're getting the point? You can talk in favor of them and against them, and if you feel like recommending there, so you can say like that. Are you getting the point?
Yeah.
Because in the real world, things are not that easy, right and wrong. Many times things are in the middle. Okay. So composition, succession, evaluation, nomination committee. So what is the role of nomination committee? To review regular the structure, size, and composition of the board, consider balance on the board, ensure appropriate management diversity, balance of skill, offer independently, all of that. And who is part of nomination committee? NEDs. Other two committees, audit committee and remuneration committee, is 100% NEDs. We'll come to that. Only in nomination committee they have used the word majority. Now if we have 3 NEDs, we can have 1 ED as well. The reason being, they are not involved in execution, so they don't know how the senior managers or other managers are performing. So if somebody is executive, they can recommend the person properly because they are working with them. So only in nomination committee the executives are allowed. Okay, the chair can be on the committee but can't chair the committee. There should be formal, rigorous, and transparent procedure. Every time the procedure should be transparent. Anyways, these are just the things they won't ask from here. Main thing is, now we'll go to DAISTRUK board. Okay. If you want, I can share the screen also. I want answer from you on the first point. Review regularly the structure, size, and composition of board and make recommendations to board. This thing I raised when we are doing pre-scene analysis also. Do we have proper structure and size in the board? Do we have proper composition in DAISTRUK? What recommendations will you make?
The simple answer is no, we don't. So
We don't.
if we look at the structure, we can see that the corporate governance code is not honored in all aspects, even though some aspects they are honored. The board is not made up of equal number of executives, executive directors and non-executive directors. We have 4 executive directors and plus the CEO, and then we have 3 non-executive directors plus the chairman. So there is sort of an imbalance in there.
So we are short of 2, you are saying. 1 or 2?
1.
Short
To
of
make
1
it 4.
non-executive.
Yeah.
So if you see executives, we have Henrik, Doran, Rasim, Andreas, and Max. 5. Then if you see non-executive directors, Professor Hong Liu, Khalid Abbas, only 3. So we are short of 2 because it says 50% excluding the chair.
Excluding the chair. So, but even if you add the chair, there are 4, and then the other will be 5.
Yes. We need 2. Yeah. Farah and then Vishal.
So yeah, absolutely. I think we're short of 2, and but also on the reflection of that, within. If you look at the committees, you don't have a finance presence in the committee, but also looking at the executive directors, I feel that during the chief operating officer, she's heavy loaded with the responsibilities, and that I feel like that task needs to be split into another ED.
Okay. So what skill you want in executive directors? You want a new executive director at the board, Farah?
Yes, so I feel like there should be possibly another not chief operating officer, but that role for Doreen should be split, because not only is it transportation and liaison with clients, there's warehouse operations, which is effectively the core of the business. And I feel like that is heavy load and it should be split into 2 EDs.
Right. So make this point. Sometimes this can come up as an exam question also. They will say there is weakness in certain committees, and also they'll ask what improvements we can make. So this can be a valid point. But again, if you're getting new executive, you have to get, let's say, 3 NEDs. We're already short of it.
Yeah. I mean, with the NEDs, I think there's 3. We need 2 more. We definitely need an NED who's finance background, because we don't have a finance present in the audit committee.
Right. Okay. Vishal?
So a couple of points. One is we spoke the imbalance situation between EDs and NEDs. That's we spoke. So there are 2 NEDs which, in my view, we should go forward with. The skill set. There are 2 things that in particular we can look at. One is audit and legal, because that seems to be pretty much missing in the current structure that we have. We can even look at 2 more options to go with, and depends on what situation we are into it, because looking at the scenario and the competition, we don't have a risk officer. So that's something which we would like to include. And maybe, the modes of transportation. So somebody who can actually, showcase their experience into C-Link. Basically, that line of business can be developed. So, that composition is also missing. So 3 things: audit and legal, C-Link experience, and risk officer. So if out of these 3, if any 2, skilled people can be hired as NEDs, that would actually solve the situation. Plus, we have the problem of the audit committee, which I think it's dealt later because of the chairperson's presence in there. So there is a lot to handle when you look at the composition of board of directors.
Right. So please make a list of these points. Okay. There are a lot of things to do. When we do SWOT analysis for the pre-scene, we need to do specific SWOT for the board as well, because company is only as good as their board. When we are talking about diversification, going in new industry or sometime a new market or new product, wherever we go, we need somebody at the board who understand that business, or sometime we need to get a new person in the board who will be expert in that field. So please make list of all these points. Yeah. Suhas, I'm waiting for your answer. I hope you have made the list.
Yes, I mean, I little bit I work on this on the structure. So what I feel, as Vishal also mentioned, so we need somebody from the internal audit perspective, and then not exactly for the internal audit. I believe there is somebody on a executive director level from risk management and internal control. And I also feel there is a lack of somebody who is into customer service area. So because since we are into a service industry, I feel we have to face the customers a lot. So the customer satisfaction is the ultimate thing for us. Then the somebody from top level who is responsible for the customer service or customer satisfaction kind of a thing. So there should be somebody who can have the control on that area. So that's something I think is important. And on NEDs, as we discussed, these areas like risk management, internal control from background NED we need to have on the board. And as we discussed, like there should be some 50% ratio of NED and executive directors, except chairperson, that has to be there. That's why I feel the current structure is not so bad, but looking at the future and some future opportunities, I think there should be some improvement in it.
Okay. And what should be the background?
Background for them is like somebody who has the experience in customer support or customer acquisition or customer servicing kind of a thing. And another is risk management and internal control is a requirement.
All right. And obviously this should be done through the nomination committee.
Nomination committee, yes. And yesterday when we were working on this of matrix, and we encountered one of the point for the market penetration is a marketing. So
Right.
I also feel there is also a lack of expertise in the field of marketing or to reach out into a market. So that area is also something which we need to explore.
Right. I believe we must be having senior managers who are taking care of marketing.
Yeah. Correct.
The
On
problem
the
is-
business level, yes.
The problem is if we get everybody, not business, strategic level only. If we get everybody at the board, so firstly, when there is a team, there are a lot of advantages that expertise will come in and everything. But the disadvantage, firstly, it will be costly for the company. Secondly, the decision making will be delayed. Thirdly, for every executive, you need non-executive directors. So a lot of new problems can come in. Many a time the decision will be very slow, and we can lose the opportunity as well.
Yeah.
Like in the previous CIMA case studies, there was no CIO itself or anybody to take care of technology. But they have a senior managers, and senior managers were doing a good job. Still company were okay to do it. Anyways, we'll go to the other committees quickly. Yeah. Next is audit committee. I hope you can see that another screen now. Okay. So monitor integrity of financial statements, guidance on annual report, reviews company's financial internal controls, monitor effectiveness internal audit function, recommendation on appointment, reappointment of external auditors. Many times companies outsource internal audit also. Review and monitor internal auditors independence. So these things we don't know directly how it is operating. But when you get a question related to that, you can say yes, it's a responsibility of the audit committee. As I said, this will be a discussion question. If they ask, should audit committee be blamed, would they will be taking this, things like that. Should, could, would, they can use. Okay. One weakness, we already know that person need to be changed, and we need to get somebody from the finance background. Now next is remuneration committee, setting remuneration for executive directors and the chair. What kind of remuneration we need to, certain companies like Google, they are very famous for giving heavy remuneration. At the same time, another companies, their competitors might not be paying that much remuneration. The remuneration can be one way of attracting the talent, retaining the talent, but obviously flexibility and other things also need to be considered. And remuneration should be in line with nomination committee also a little bit. Reason being, they want to tie up the employee for the longer time. If they're paying them heavy amount, they're paying them shares, obviously they want to lock it up for a few years. And there should not be so much of internal parity. That means senior people are earning, let's say, 20 times, 30 times more than their team. So it will demotivate the other employees. For example, promote long-term shareholdings by directors. That is preferable. Level of remuneration to NED should reflect the time, responsibilities, and commitment. Address these when setting up policies, clarity, simplicity, risk. So there should not be any problem or there mistrust or miscommunication. Everything should be transparent, simple, and easily predictable. What kind of remuneration a person can get. Okay. Hello.
Yeah.
Then next topic is very logical. We can just discuss one point from each of us. Directors remuneration. So what do you believe how we should give remuneration to the directors, and how we can lock that person? Lock as in motivate that person to be with us, let's say for 4 years, 5 years. For example, Tata Motors in India, what they are doing, every 3 to 4 years they give a new car, and that car will be not for free, but if you work for the company another 3 years, that will automatically become free. Like recently, one of our students get promoted as general manager. He got a new car recently. He just got transferred in a new car. So that car will be free if he works in Tata Motors for another 3 to 4 years. But if he try to leave the company now itself, then that will be taken as a debt. That's one way of retaining the employees. Obviously, they pay salaries, everything, and this is on the top of that. So what you would recommend for DAISTRUK to be a part of the remuneration, where they can motivate new people to join, talented people to join, and the current employee to stay with us? And obviously you can add certain points. Should we be the leader in remuneration like Google, or should we be there are two things: internal parity, what I said, the difference between senior and junior people. Junior as in their team, and there is something called external equity is also there. That means same person, same industry, in different industry they are getting double salary or triple salary. So that can also make a difference. Yeah, Farah, you can start.
So I think with remuneration, it's layered. You've got the salary, which is the money that they receive, which you would definitely always, as a minimal, be amongst industry standards. If you were looking at the salary of an NED, anyone can go online, and you would want to also looking at the employment market. If employment levels are very high, then you're able to lower that a little because you've got a good pool. However, if employment levels are really low, then obviously you need to beat the expected rate. That's money. But then there's other benefits which are tangible and intangible, like bonuses, pension contributions. If you're a director, I'm not assuming that they'd be at a certain age, but pensions are important to them. So are they able to be tax efficient and salary sacrifice a specific amount? Or will the company put in a percentage? Benefits like cars and different packs also always, I guess, are motivational, but other things like remote working, visits to different areas of the business, and understanding of that get together day. All of that is a holistic way on tailoring a package to specific employees.
All right. And how it can help us to retain them?
It's almost looking at it in on all areas, making sure that I think it's the hygiene pyramid, where it's tapping into all of those different levels of ensuring that an employee has their basic needs covered, but obviously have the satisfaction that they're doing a good job, and that there's it's almost like layered of different sort of elements that will attract employees.
All right. So hygiene and motivational factors both should be their mix. Okay. That makes sense. Others, you can just give example from your own experience as well. What you like, what you dislike.
So you like or dislike, or
No, I mean
what would be
your
the
own
best way?
experience. Your own experience also you
Okay,
can
okay, okay.
in that
So I
way.
think one important aspect to what Farah said is there's in some companies I've noticed that they also give equity revitalization plan. So it's like they usually call it as ERP. So what happens is that a certain part of equity has been vested every single year, and then usually the term lock-in period is for 3 years. Now the number of shares gets vested every single year, so that at the end of 3 years there is a big hefty amount that gets paid to the director, which helps in definitely longevity within the organization, as well as motivation that it is purely over and above your salary, your bonuses, and everything else. So this is something which most of the company have started doing it, and I have seen this in my company as well.
Very good. Will it help to retain the employee also?
Indeed, because that amount is very catchy, Misbah. So it looks like that, after 1 year you get, and it's like in some companies they do it even in the proportion that the first 2 years becomes the most vested side. So for example, if it is 100% payout happens on the year three, end of the month, year three, then 40% gets vested in year one, 30% gets vested in year two. So by the time it's year two, there's always a thinking that 70% is already there. Why not to stretch for one more year? So that sort of psychology, pretty much the companies are adopting, just to make sure that it doesn't look like a big long period, but also make sure that the people are always motivated to look at it.
Awesome. And when you say it's pretty catchy, means that's not less than industry, or at least
True,
competitive
true,
with
true,
industry.
true. Absolutely. It's industry standard. So we also, in my company, we also do a market research. I'm sure most of the company does that. So recently, I would say last year, we did the entire company gone through the industry benchmarking. So all the people who are below the benchmark have got a pay raise, which is beyond your usual cycle of pay raise. So we do that market correction just to make sure that we are on top of market. And then it was a very positive movement for all the people in the organization that the company is thinking aloud instead of people asking for it. They have been very proactive in doing so. And this is done across all levels, not just at one level.
Very good. Anything else you guys want to add?
No.
Okay. That's very logical. You can add then what they should provide: financial incentives, maybe mix of share price also, opportunity to grow, getting promoted within the company, supporting for their education, like CIMA fees and everything. Here they are talking about corporate governance and the audit committee. Again, they said these details usually are not tested, not usually, mostly are not tested as a case study exam. So you can just ignore it. You can read once, that's not a problem. Then SOX is basically rule-based approach. This for US based, not relevant to us, but here they are just giving a diagram kind of thing to make us understand how it is different from the rule base and how they are doing the risk management. Ultimately, their aim is also to do the risk management. Like for example, audit committee. Company must have an audit committee, will be disallowed from trading if it does not have one. Auditors should be independent, same. Audit partners, senior partners must be changed every 5 years. Why? Because of the familiarity threat. Restrictions on dealing, directors prohibited from dealing in shares at sensitive time. Therefore, we have locking up period. Because let's say the company is going to invest in a new project which will give a very good NPV. So definitely it will be tempting for the directors and the employees to buy the shares. That will be illegal. Increase financial disclosure, financial reports to detail of balance sheet financing, and sometimes integrated reporting can also come in, but not part of it now. Certification of accuracy must be vouched by CEO and CFO. In rule base, it's very strict. If something happens, the CEO and CFO can even go to prison, which is not the case in the principal base. Internal control report, annual report must include statement concerning the internal control system in the company. And this will go in the AGM, annual general meeting, to the shareholders and our important stakeholders. If you just see, everything is talking about managing risk from different areas. Anyways, so here they are talking about the implication, basically advertising the corporate governance, how corporate governance can help in the strategy, which we discussed already in the start. Increase power of governance, increase shareholder power, greater pressure on board and control the business, greater scrutiny, emphasize risk, all of these things. Okay, you can talk so many more points also, like improve diversity of the board. Already in DAISTRUK we have good diversity. We can see from the name, for the names, some are Asian names and other names as well, like that. Diversity should be from different culture, different education, and differently able people should also be there, different communities, everyone should be included. That is diversity. Delegate internal controls. Anyways, now we'll go to the next section, which is again extension of corporate governance. So what we do when we have risk, we want to mitigate that risk, because we cannot avoid most of the risk. We cannot make it zero most of the time. We can mitigate, and how we can mitigate it? Through the controls. And we cannot control external things. What we can control is internal to the business. So internal control plays a very important role. When we talk about risk management, when we say after doing this we'll make a risk and risk management is nothing but internal controls. Most of them are internal control, if not all. Okay, the whole system of controls, financial and otherwise, established by the management in order to carry out the business of the enterprise in an orderly and efficient manner, ensure adherence to management policies, safeguard the assets of the business, prevent and detect fraud. So first we have to prevent. Again, we cannot prevent everything. So next is detect, and secure as far as possible the completeness and accuracy of the records. Again, 100% is not possible. So secure as far as possible. And internal controls are there in every organization, whether it is for profit, non-for-profit, listed, unlisted, charitable organization, or anything. For example, now during COVID, CIMA said you can give exams online. Pearson VUE has launched their application. It was there before Pearson VUE application for online, but CIMA was not allowing the students. But in COVID time, they started. So it's a risk that student can cheat. They're writing from home, isn't it? So they started new internal control. There will be two people called proctor. They'll be watching you all the time. Your camera should be on, your room should be locked, you should not move from the place. They will record the entire thing. So that is an example of internal control. Why? To maintain what? So maintain the honesty, the integrity of exams. So here for internal control, usually companies go with the COSO. COSO is internal control. But again, we are not binded to use that itself. If companies believe, they can come up with their own policies on internal control. The only primary thing we have to be considered, again, it's our own choices, cost versus benefit analysis. We cannot spend more money to defend small money. First, we have to see what is controllable risk, what is uncontrollable risk. For example, in DAISTRUK, controllable risk is, let's say, frauds happening in our warehouses. People are stealing things, employees are stealing things. That case controllable. Uncontrollable is economic situation of around land, policies, rules, regulation of around land. That is uncontrollable. Based on that, we'll have our own environment. What is management attitude? Remember, this internal control and risk management is directly relevant to what is the risk appetite of the company. Are we risk seeker? Are we risk averse? Are we risk neutral? All of that. For example, management's attitude: behave with integrity and ethics, maintain appropriate culture, set up good structure, all of this. Control activities, what we are doing, good organization structure, having contracts of employment, establishing policies, discipline and reward system. Discipline, rewards. So there are two things. First is, if somebody does a mistake, that person should be disciplined or kind of punished. And if some person does something extraordinary, then that person should be rewarded. So we need both the type of control. If you just only award people who are doing good and there is no issue with people who are underperforming, then it's a problem. Or if you are only disciplining people and we are not awarding extraordinary performance, again it will be demoting. So it should be mix of both disciplining and reward. Appraisal and feedback we can do. If you just quickly see what internal controls we have in DAISTRUK already, I'll go to the risk analysis. 1 second. Yeah, can you see the pre-scene again? Hello?
Yes. We can see.
So some, obviously for uncontrollable risk, they are just seeing what we can do, but other places we are doing internal controls. For example, Round Indian government is aiming for 0 by 2052. So the company has actively pursued to use new technologies to reduce emission. That's the control. Then DAISTRUK activities create significant health and safety risks. So what control we can do here? All staff receive health and safety training during their induction. Ongoing training is provided. Maybe let's say every 2-3 months they have to do another training. These are all example of internal control. And another risk is DAISTRUK operation can also risk damage to property belonging to third parties, including clients, goods, premises, and vehicles. What we do for that? Has detailed procedure in place to minimize the risk of injury and damages to property. This include training, task-related operations of equipment, detailed record, maintaining about all events cause injury, damage, and that had the potential to do so. Okay. I hope it's very basic. So that is internal control. This itself is enough for us. If somebody left, man. 1, 2, 3, 4. Okay. I thought somebody just left and rejoined, I think. Anyways. Okay with internal control. Any question here? Only thing is, when you're recommending something in exam, be careful that the cost and benefit analysis has been taken care of. Having said that, it's not always, but mostly. Why not always? Because there are certain risks which is downside. For example, cyber security, health and safety, which there is no direct benefit. Indirect benefits are so many, but you cannot say this is helping me to save this much money, this improving my profit. Not direct. That time, it's logical and understood to do that. But other places, if you're saving petty cash, if you're saving certain frauds, so always you have to see how much we are losing and how much we have to spend to save that. One good thing we can do is we can use these methods. This can also be, say, in mnemonics as soap spam. We can do segregation of duties. Obviously, this control depend on what kind of risk we have. If we see that one person is getting more power, or that person is only purchasing and paying them, so what can happen? That person can give his own address instead of company's address. So that time we can do segregation of duties. And sometimes if risk is different, we can do organization control, authorization approval, personal control, supervision, physical, arithmetic and accounting, management control, like that. What we'll do quickly to understand in a better way, just think for 1 or 2 minutes where segregation of duties will be useful for DAISTRUK, where organization control will be useful for DAISTRUK, like that. Everybody can give one point. Okay, let me start. In DAISTRUK warehouse, okay, when remember we also provide warehousing service. So when we are receiving of goods, so there will be a different team or different person taking the inventories record, and obviously when we are reloading it, it should be a different person. So what we are doing SOD, segregation of duties.
Like a maker checker.
Maker checker, yeah. So just put this control in DAISTRUK's operation. If you want, take a minute to think. Very easy.
Cherry picking. I'm choosing personal control.
Additional control. Okay.
Yeah. The is it I think it's personnel, is that right? Or is it personal? I'm just looking at number 4.
Yes.
Anyways, so I think that our recruitment processes should be very thorough, in the sense that we control very sensitive data of our clients. And so we must conduct background checks about people's integrity and how professional they are in handling data, in order for us not to be culprit of the GDRP related issues. And so, yeah, so we should be very careful. And then once we have employed this personnel, we should also give them training to actually for them to be aware that they only have to use data for business purposes only and not for personal use. I mean, if we reiterate that. So that's me for point 4.
So personal, you are saying for our employees working in IT, specifically to IT.
I mean, I think I've made it specified to, specific to IT, as I'm kept talking about, IT control. So, yeah.
Okay. Because same thing we can use for our drivers also when they're coming in, especially, big vehicles, very difficult to drive and they need license.
In the UK, for instance, I think people driving the heavy goods vehicles need certificates of professional competence, and they need specific licenses as well. And so they have to be checked thoroughly to ensure that, they are qualified. Otherwise, it will lead to other risk as well for the business,
Yes, definitely. And we can even have some controls to check their health and fitness, especially if somebody has any issue with the eyes and they're wearing specs. Let's say sometime they came to work without spectacles. That itself can be a very big risk.
Absolutely.
Good point. Okay. Next.
In segregation of duties, I think some credit control or the credit limit kind of a setup we should have, because ultimately we are serving our clients, and there are some payments depending on the payment terms. We also have to have some controls over the credit that we are giving, and what should be the next order that we are going ahead with. We need to check through the system and by the personnel that we are working, those who are working with us. We need to have a control, like we need to have a payment in our system, and then we can process the next order. So that credit control, there will be different people who will be involved, like credit limit to be set up by finance, and customer master data which has been created by the logistic team or the customer support team, and that accordingly we can have multiple checks on the credit thing.
Good. That's fine. Supervision can also be very important in our warehouse. where we have the managers there. Supervision is very important because the handling of the goods. We have certain goods which need refrigeration. We have certain goods which is very risky, like oil and everything, where we should not allow people having cigarettes or anything else. Then we have food items, perishable, which should be uh, transferred quickly, things like that. So supervisor will be very important there, because sometimes employees, if they are tired and everything, they might just take it loosely. Okay.
Yeah.
Anything else?
What about the access controls?
Access control at the warehouses.
Physical
Yes.
control? That will be part of physical control, right?
Yes. Physical control also, or we can say as a part of management control. It can be different part, because we can do this with the technology also, or if you have a security, a person doing that.
I think that also will go with the segregation of duty, because
Duties,
yes,
yes.
because when you have duties are segregated, then the systems or the the operational thing you cannot access the somebody else's work that way.
And then what you said, Suhas, is truly, I also feel the same, that, when you're doing a segregation of duties, obviously you have your design roles. So I have also done SOD audit in the past. Now we have a role-wise access. So the first check we always do is setting up and putting up a matrix. What access do you require by what roles? So if you have a role sort in place, you will have at least a clear line of sight. Okay, there is no overriding principle, or probably is there something which is a lapse in the controls that can be easily identified, because each individual has a different role in the ERPs or in the master systems or technology.
Exactly. In my current organization, I just want to add one point here when we are talking about these controls. Like as you said, Vishal, there is a SOD audit happens on every quarter basis, and what they check is, see, for example, if I have access of one system in the ERP, and if I'm not using it for more than a month, then I'll get the automated email that why we are not using. If I'm not using, then my rights will be disabled.
True
Yeah,
that.
it automatically
True.
happens. Yeah, so that way it is better to have a control. If I'm not accessing those systems or the areas, then it's better I should have no access to it.
Yeah, like in my, sorry, but I'm just giving my company example, like the laptop I use. We all know that the Face ID is in the phones, but my laptop has also the Face ID. They have it encrypted. So I think unless see, password is something which is the story of the past. Now they have put in the Face ID. So unless and until I put this on, I'll not be able to access my own system. So that's something which is pretty unique. I haven't seen this, but it's there in my current firm.
Yeah, that's pretty new actually.
Yeah.
And what if you are wearing mask? Will it accept it?
Yes, so two set of two, just like in iPhone, right? So two set of pictures are taken with mask because of this COVID protocol, and as well as actually I have gone for three because of my specs. So with specs, without specs, and with mask.
And
Pretty
is it
pretty unique.
two-step, or is just the photo and the thing works?
No, no, just one step, one step.
And what if somebody just put your photo?
No, it will identify. It will
Yes,
identify. So even if I put my photo, and even I did it. So out of my curiosity, I did it. That how does it work? But
Right.
then it didn't allow a photo to be put in place, because it looks like they are built in some sort of a movement. So if the person is not
yes.
moving even a little bit, it
They
is not
capture
going to
text
enter.
texture actually.
Yes, correct. That's the right word.
Right. Or maybe they can do this, and on the top of that, you can put password also, just like two-step.
Hmm. Hmm. We do have multi-factor authentication. We call it MFAs, but we do have that. But for logging into system, just starting a system, you would need it. But then going into different ERPs, then you have MFAs.
Right, right. That's a good way to do it. Awesome. Okay, let's move forward. Yeah, And one last thing to add here is, for one particular risk, you can add so many controls, whatever you feel like. There is no compulsion for one risk, only one control. Like SOD, segregation of duties can be there, supervision can also be there, then through technology, arithmetic and accounting can also be there, management controls can also be there, etc., etc. Only thing is, you should be thinking of the cost involved in it. Financial controls also, we have budgetary controls, control over sales, purchase, payroll. Non-financials, quantitative can be performance target, actual results recorded. This is quantitative. Next, non-financial qualitatives also, what employees are doing, how many training they have done. It's very difficult to do here in qualitative. Sorry, I think spelling mistake there. Employee training, control methods, physical controls, projects method, all of that. Limitation to internal control can be limitation to risk management. Again, this cannot turn a poor manager into a good one, or a failing company into a successful company. It can help, but obviously it cannot be responsible for that. And remember, the system can only provide reasonable assurance. And many times the management, if the top person is involved in the fraud, let's say a board member, it's easy for them to bypass it. And we can only set controls for the risk we have identified. Imagine we have not considered a risk that can even happen. So there is no control for that, isn't it? Why we don't have controls for COVID? Because we never thought of that risk coming in. There are resources constrained in provisions of internal control system, limiting their effectiveness. So resource also we have to see. If we have limited resources, obviously we have to give it to the biggest risk we are facing. Then we talk about fraud, dishonestly obtaining an advantage, avoiding an obligation. Real example I want to give, we have a CFO named Salman from Middle East. I think Vishal has attended one class with him. So that's a listed company for retail. Okay. They have a cyber attack. And after that 1-2 years, in fact, he was about to write the exam, and because of cyber attack, he was very much disturbed. He's a CFO, and being a listed company, you can imagine how much pressure he was going through. And they don't have an IT director also in the board. So later on, after a few months, they realized it was their own employee, and that employee from cyber team itself. That was the funny part. From the cyber security team itself was responsible for the breach. He was trying to get the data and sell it to the outside person. And the main reason for that was not dishonesty or for the money, just to take revenge from the company, because they were not being good with the company. Basically, company was not helping him, or basically was not giving what was promised or expected by the employees. In fact, there are a lot of other research also where they say 60% of these things are coming from internal employees only. Disgruntled employees, they call them, dissatisfied employees. They feel like we have given 10 years, 15 years to the company, and company has not done anything for us. So people, human by nature, are kind of taking revenge. They like taking revenge.
Right.
We'll discuss this more in cyber security, but fraud is also one example of that. Now, because of technology, it's easier, but in other ways also people will do that. Sometimes just they will tarnish the reputation of the company. So we have to be very careful with that. So this is an example of motive, and this motive is very strong compared to the dishonesty or opportunity. If people have motive, they will find opportunity. They'll find dishonesty. They'll find a team and everything. In a lot of movies also, this thing has been shown. People in banks, how they do that. Usually it's the ex-employees who are doing that. So what controls we can put here is, if you feel somebody is like that, we can put that person red flag, or we can be more careful. Because many times company does this, that's true. And sometimes it's just miscommunication, or perspective, change in perspective. I hope you guys have also experienced some of this at workplace.
Yes, and especially the companies like DAISTRUK, who are having 22,000 employee strength. So we cannot just ignore this risk, because it's very much possible that out of 20,000, somebody definitely will think in that way.
What do you think, Suhas? How we can control this?
So what I feel is like fraud is something is there are two things when the fraud happens. If somebody has intention from day one that we cannot avoid, and then somebody has, as you said, some revenge kind of approach or the attitude. So this attitude we can at least avoid by having a good like you said earlier, we discussed like when we have controls in place, we also have some rewards in place for the employees. In that way, if we appreciate, so for example, one of my friend, just to give you example, he's working for an insurance company. So this company is actually giving him 2 times or 3 times international trip. But when you talk about their incentives are maybe lesser than what market gives to the employees, but they give them international trips. That way, this guy is working for this company from last 15 years, and that way they are always happy. So to retain and to gain a trust of an employee is a key for any organization. So not only look at the profit, we also have to look at their employees satisfaction, which is more, you know, easier way to avoid these kind of things in the future.
Yes, that's true. And many times this person, when they are leaving the company, that time they try to do that. Let's say they are in notice period, so they become
Correct.
very casual
Yes.
because yes, they are doing. So this risk can increase. In one of the companies, I heard what they do if somebody's in notice period, let's say 3 months, that person is will be working, but he or she is out of the project where there is a confidential information when things can affect them in the future. Or let's say this person goes and work for the competitor, so they will give them some basic work or the work which doesn't require any confidential information. He is not directly involved in decision making and everything.
Exactly. He is completely sidelined. Then
Yes.
yeah,
In
that
fact,
happens.
most of the companies in consulting environment, they sign NDAs, non-disclosure agreements, so that if something happens, that person can be sued, even
Uh,
during the partition or without.
so do they sue them in real or just on the
Yeah, yeah,
paper?
yeah, yeah. Of course, of course. I was with EY. I was doing this divestiture projects, and there we all have to go through this. And I remember there was one case, but it was not eventually landing into a serious consequences because the data was not leaked in completely, but it was just as a sign. It was, I think, at a nascent stage they developed this. So I think it was pretty evident that the companies are doing so. And I also personally signed NDA, which clearly says in that NDA that if something happens, you will be sued.
Right, right.
And most of the times when there are some frauds on an operational level, the top level will definitely not, they get not informed that something had happened, and the person also leave the job, and now after 2 to 3 years they get to know that there is something which had happened. But just because it's not so material for the organization, many of the frauds are not highlighted because of the materiality of those areas. But then we also, that is also some kind of risk for the organization, though it's not material. So it means we have some we are lacking some internal controls within the organization.
Yes. In fact, they've mentioned this in the textbook also. Technically, everything should be reported, but many times companies, again, cost versus benefit, they will look at it. It's
Correct, correct.
non-material, they will leave it, and sometimes they'll just ask employee to resign themselves
Yes.
because they don't want that to affect the company's reputation. Usually, in CIMA's perspective, in the exam I have seen, they come up with the policy of zero tolerance. And sometimes it will be like the person is a senior person who has worked for so many years in the organization, and they're asking for, give us another chance, or they're just uh, wanting to negotiate or something. But your policy says zero tolerance. So it's a very difficult decision for us. It will be very tempting because you cannot replace that person. At the same time, if you do that, it will give a wrong signal to the employees all over the organization, and obviously can affect our reputation also. Prevention, detection, response, investigation, fraud. They have given certain points that's logical, not required for us. Okay, now we'll go to internal audit. We're just talking about audit only now with the control. So basically, if we talk about the word auditing, what is audit? Did anybody work in audit? Vishal, I think you just did. What is audit, Vishal?
Yeah.
What is the meaning of audit?
It's checking whether we are compliant or not. So in simple words, and very layman put, making sure that all the controls are in place, making sure we are compliant or not, and most important of all, it's done by an independent person or an entity altogether, so that we have the rule of independence in place.
Yes, very good. So basically, audit is about assurance. It's about cross-checking. It's just about to see if things are going on how it is supposed to be. They are not working on anything. They are not part of anything, but they are just as a checker. They'll just see if the things are going how it should be. And obviously, for doing that, we need somebody who is independent. So there are two types of audit: internal and external. External audit mostly goes into by the law. In CIMA syllabus, we are not studying about the external audit. We are not studying about the laws or anything. But internal audit is a scope of CIMA qualified because this is part of risk management. If you go with their definition, internal auditing is an independent and objective assurance. Objective is unbiased. Assurance, we are giving them confidence. Activity designed to add value and improve an organization's operations. Some people will get confused how it is adding value. Definitely, if you have better internal controls, better risk management, it will add value. It will add value in financial also. For example, if there is proper control, there will be less wastage. Less wastage means more value to the product. Ultimately, we can save money or we can improve our bottom line. It helps an organization accomplish its objective by bringing a systematic approach to evaluating and improving the effectiveness of risk management, controls and governance. Having control is one thing. Let's say you have a lot of controls in place, like we talk about in the last chapter, soap spam. But who is actually checking if the controls are working effectively, if the people are working effectively? Let's say people are just changing their ID cards and anybody is getting access. So there are controls, but nobody is following it. So we need an internal audit team to come and cross check it. And not only cross check, many times they provide recommendations also based on analysis and assessment of data and business process, that this thing should be done, that thing should be done. And after recommendation, they'll come back again and check whether it has been implemented or not. If not, then they have to explain why. Maybe because of the cost involved or maybe other issues. So why a company needs internal audit? Again, same thing. Even unlisted companies do need internal audit. As far as DAISTRUK is concerned, definitely we need internal audit. But sometimes, as we said, that listed companies can also survive without having internal audit because we are into principle-based approach. Or sometimes unlisted companies also have internal audit. Why? And what are the things that will decide do we need an internal audit or not? The scale, diversity, and complexity of the company activity. Like DAISTRUK, it's very complex. Even if it is unlisted company, we would recommend that we have an internal audit. If the company is small, the operations are not complex, they can still survive without internal audit. Maybe risk management or risk managers are enough. Number of employees. If the employees are very big, like Suhas just mentioned, that was a very big point. 22,000 employees we have, more than 22,000. That too directly. Indirectly, there will be many more. So a lot of time for frauds also we need an internal audit team. Then cost and benefit analysis, it will help. Sometimes companies are investing too much just for the small benefit. So internal audit and cross check that. Change in organization structure, reporting process, or underlying information system. Let's say we went for a merger, we went for a strategic alliance. Organization structure has changed. So again, internal audit should come in. Change in key risk, external or internal risk has been changed. So again, our approach towards them should change. Problem in existing internal control system. We are not happy with the result, or we are not the internal controls are not effective. Basically, the internal audit can come in to help them. Increased number of unexplained events. So a lot of frauds are happening and we are not able to find why and how it is happened. Maybe internal people are involved, therefore it is unexplained. These are certain points. There can be a lot of other reasons also we need internal audit. Obviously, the main reason can be required by the corporate governance law. Okay. Do we have it? Yes. Do we need to continue having it? Yes. DAISTRUK. What is the scope? What they do? This is very generalized. They see the three E's: efficiency, economy, and effectiveness. Basically, whatever money we are investing, is it worth it? Then examine financial and operating information testing, review accounting and internal control system, assist in carrying out external audit. So many times the role of external and internal audit are similar. So if you have internal audit, definitely some job of the external audit will be reduced. Then assisting with identification of significant risk. While doing the internal control check, if they see that there are certain risks which is not been in the list. Remember in the previous chapter we talk about we can only have controls for the risk we have identified. So these people working in internal audit are experts. They know the industry. At least some of them should understand the industry in their team. So they will say, there are certain risks which you have not listed. Please list that down and have controls for them. Special investigations they do. In terms of fraud also they can do. Other times when we give certain contracts, when we outsource, let's say production, manufacturing or any service, so we can sign a contract that our audit team can go and cross check anytime. Whatever they have promised should be followed. So we can send our internal audit team for the cross check. This was asked in one of the exam also, in CIMA exams. Can we send our audit team, internal audit team, for investigation? Because a lot of news was coming that our supplier is not ethical or not following their work according to the agreement or contract what we have done. So can they do? Yes. Then review compliance with laws, regulations or internal policies. Mostly this is conformance risk. It's a downside kind of risk. If you don't comply or do sooner or later, we'll have a problem. So there are a lot of scope for them. Apart from that also they can do certain thing on the, it will come under special investigation only. Then we can say they can do outside this also if the board is directing them to do on the discretion of the board. For a special investigation, this question has been asked, I think 2 to 3 times. Going to the supplier or sometime investing the fraud in our own company and things like that. In this, you just have to do a discussion, what they will do, what will the advantage and disadvantage, and you'll get a lot of data from the attached material itself. Any questions here?
No questions so far.
Now, what are the standards, attribute standards they should have? They should be independence, obviously, interfere from deciding the scope of action, especially company like DAISTRUK. If we have internal audit in-house, let's say we have an outsource, that time also we will have them separate building. Physically also they will be separated. They'll not be working closely. And other employees are also being directed not to mingle with them. Why? Because that not confidentiality, but familiarity threat will come in place. Therefore, they should not be interfering with the work. They should not even be working physically close to the team. If they become friends, definitely it will be a problem. It will be against the independence. Objectives, there should be impartial attitude. Any conflict, for example, if you have outsourced, same company should not do internal and external audit. Professional care, they should have some knowledge of the key IT risk and controls and computer audit techniques. So IT risk, now this is trending. Basically key risk of the organization. They should understand the industry. Performance standards. These are attribute basic. Next is performance. Obviously, everybody's performance we are testing. So managing internal audit, risk manage, control, governance, communication results, all of this they should do. It's not like anybody can come and do internal audit. Recently, this thing for Adani was in the news. The small firm was given the audit. So where there were two issues, right? Attribute standards and performance standards. So that was a small firm, but do they have attribute standards? The answer was yes. But why the media was talking about it so much? Such a big company, global company, having such a small auditors for them, because there was an issue with the performance standards. How they will manage, how they will do that. without experience, without their team, very young people, very small team, all of that. Okay, so both should be satisfied. This information is not given in the pre-scene, but we assume this is already done. Okay, structure and independence should be independence of executive management. They should not do day-to-day operation. However, in a smaller organization, the same team is working also, and same team do internal audit also. Very small organization, if they don't have an internal audit or they don't afford to do that. But in DAISTRUK, it's not possible. Report directly to senior director. They should always have access to the senior people. In addition, however, the head of internal audit should have direct access to the chairman of the board of directors, not even CEO, the chairperson, the ultimate powerful of the board, and the audit committee. So audit committee will be the most powerful person for external audit also and internal audit also, to see what is the scope, how they are working, what approaches they are following, what is their plan and everything. And they are the one who will approve the appointment and termination of the head of internal audit. Why we are giving to audit committee? Because audit committee is made up of only non-executive directors, and they don't have anything to do directly with it. So they are not biased, or they should not be biased, considering that they are the one. Imagine if executive people are giving that. So executive people will say, you should not highlight our bad work, otherwise we'll not renew your contract. So there will be a problem. The effectiveness will reduce, isn't it? For example, this big fours, there is one accusation going on them is they help companies in internal and external audit. But what they are coming up back with the reason is we are getting only 5 to 6% of our revenue from audit works. But the problem is this 5 to 6% revenue they are getting through audit work, that is correct. But just because they might be helping them here, companies are giving them other businesses. They are renewing their contracts.
Correct.
There's a lot of debate going on, a lot of documentaries are also there on it. Anyways, then in a small company, it might be the responsibility of individuals to perform a specific task, even though there will not be a full-time position. A very small organization. Some companies outsource, some have their own. They will do review for accounting. They will do for almost everything. Performance testing, transaction testing, reviewing 3Es, all of that. And as understood, they should be technically they themselves should be qualified, experienced, and should do their work with the due diligence. Imagine a internal auditor team, that person itself is doing mistake, or that team itself is doing mistake. So that will be very much of problem. Is their core competency. Documentation should be kept, results communicated to management, and recommendations made. Anything else is missing here? I mean, this is a starting point. We can add so many things on the independence and structure, but these are fundamentals which will be applicable across industries. Okay, obviously things will change according to industry. Now, advantages of outsourcing. Advantage. These are very similar to normal advantages when you outsource your production or anything, even some of the services. That's what they have talked about. Like, one of the advantages is greater focus. This advantage can be conflict of interest. And obviously, we have some things to minimize the risk. Now, shall we outsource or not? It totally depends on the company. Okay. What do you think? We don't know that internal audit is outsourced or not for DAISTRUK. It's not given. I believe it's in-house, maybe. What do you think? DAISTRUK should have internal audit in-house or outsource, considering the size, the number of people working and everything. Because just 1 minute more before you answer, there are certain things which is specific to us. I mean, the audit. Specialist skill may be more readily available if you do outside. Cost of employing can be saved, may prove independence, access to new market, reducing management time. But the problem here is, will not have them full time. then we'll not have control on the standard of service. Many times blurring of roles will happen. The biggest problem is when you outsource, they will do the minimum only. But when you have people in-house, you can stretch them. And once you outsource, it's very difficult to start again in-house. Yeah, over to you guys. What do you recommend for DAISTRUK?
So for me, like I think DAISTRUK should have their own internal control team. So the reason being, as you mentioned, and we are also aware that we are a very big company, 22,000 employees, and we also have around 90 outsourced warehouses, 35 of our own warehouses. So if you look at the spread that we have, it's always better to have our own internal control so that we can stretch and have a better control on what internal audit team is actually doing.
Okay.
I mean, just to add one point here, like what happens in outsourcing of internal audit, which I personally experienced because my wife was actually in an internal audit area, and she was working for a firm which was taking some projects for the internal audit. So what happens in that case is what maximum will happen is if internal audit team is making any mistake or they are losing up somewhere, then the customer only have an option to cancel their contract. That's it. There was no lots of big consequences. But if you look at the major consequences is at the customer's end because they are actually losing something in terms of internal audit. The consultant is not doing well. So it has a threat and having a higher risk for our own company. So better to have our own internal audit team instead of relying on the consultant. We don't know how they are working, how they are doing the internal audit. But then if we have our own internal audit, I think we can have better control.
No, that's a very good point because maximum you can just terminate the contract or things like
Yes.
that. What you can lose is very big.
Correct.
More risk involved, especially company like as big as DAISTRUK. Yeah, others. Hello. Farah, Emmanuel, and Vishal, what's your point?
So I've done audits, so external audits. I feel like external audits is a checklist. They're not gonna, whereas internal audit would be more in depth, where they're looking and unpacking your whole system and understanding what are you doing with the knowledge of how your business operates. So whilst I like Suhas would say it should be an internal, and I still agree with that. I do feel maybe it should be maybe a hybrid. I say hybrid because if you're going to have an internal audit team, maybe have the majority or well, at least a few people in house, but maybe a few people out house to have best of both worlds.
Okay. Yes, Vishal.
So internal controls and internal audit is precisely so closely connected. In my view, I independently think that it has to be in-house. The reason why I'm saying so is that obviously you have an external partners to do so, but they will go and definitely the advantage of going external is you will have a rule of independence, objectivity, and all that. But when you go in-house, what you're doing is that you are building a culture for controls, building a culture for making sure that the audit is a key priority. Versus the people outlook is that, okay, we have to make sure that something is done because there is an audit which will happen. I think the general phenomena is that if we can create a culture for control, which could be done by not just one checking but concurrent checking, that will enable the rule of goodness across. And I would say that that will create much more heuristic environment, that we don't have to teach and imbibe controls in the culture of an organization. So internal controls has to be, or maybe from my standpoint, can be an internal team put together in house, and then they can try and do concurrent views. Obviously, the rule of objectivity stays close to them, irrespective. But the right set of people can be hired and then probably do the controls in house.
Yes, I agree with that. There will be more advantages, I think, having within itself.
But then the key point here is, if we have our own internal team, we also have to have somebody on the top management or from the board, like NED, who can have the, who can review and control the work of internal auditors, because then we don't have any ultimate checkers in the system. That is also important.
Right. All right. Then ethical threats also, some of the points. Obviously, both will have their advantage. This could be pressure from our bearing supervisors, pressure from supervisors, integrity is repeated. The auditor might be asked to act contrary on technical or professional standards, decide loyalty between auditor, supervisor, and professional standards. When it's outsourced, especially, this will be a problem. Outsource is renewal of the contract. When it is in-house, the problem with the familiarity. So we have to maintain the balance. Then internal external audit, what is the role and responsibilities? This is just for the understanding. External audit is required by statute or by law, appointed by shareholders or directors. Primary duties for the shareholders or professional responsibility, mostly concerned to the financial statements. Scope should be unlimited. Internal audit is usually there in larger organizations, and if it is listed, again, we can require by law. The director is the head or the CIA we have. And what is their role? Mostly to do the internal controls, or ICS is internal control system. Contribution for the 3 E's or proper working of the organizations. We can even say risk management. Fraud investigation, this we have done the same. Last chapter also same thing got repeated. Types of audit, some basics we can see. Compliance based audit, transaction checking audit, risk based audit they can do, system based audit, ERP and everything. System will be different for every organization. Management based audit, this is very difficult or most difficult, because we have senior managers and we need to audit their effectiveness. So we need somebody who is senior to them, or at least understand their work in and out, because no two managers can be same, right? No two person can be same. So how is their effectiveness? It's very difficult. This will help in organization to grow. Then quality audit, what kind of quality service we are providing. In service, no, especially quality can be difficult, because no two service can be same, right? Then other types of audit can be post-completion audit, which can help us to plan for the next audit, learn from these mistakes. Value for money audit, very famous for non-for-profit. Social and environmental audit. Again, these are the new things. Social audit, how our work is affecting the society, what good or bad it is doing, obviously how it can improve. Environmental audit, how our operations are affecting the environment, how it has been improved from the past, what was last year and how we are improving it this time, like that. Usually process is, this is only for understanding. Process is divided into 3 sections: planning, testing and reporting. Planning is most important, agreeing the objectives with the audit. Agreeing with whom? With the audit committee. Then you plan the audit, find about the system and controls. Imagine if they don't know about the system and control, they themselves cannot test it, especially if they're external and they're doing for the company first time. confirm the operation of the system, assess if controls are adequate. These are part of planning. Then in testing, they test compliance with the controls, then test application of controls, and lastly, reporting, reviewing, and recommending. Audit planning, same thing. They're just doing objectives of the audit, conducting resource benchmarking. Also, they can do. They'll see what inherent risk. Like for us, inherent risk can be changes because of the prices. In financial controls, if you're putting the fuel pricing, we can do something, but that's the inherent risk we have. Then control risk we have, like controls are not sufficient. Sometimes risk is there, but we have accepted over residual risk, so we can put more controls and reduce it. They'll just recommend. If you feel like we have not put the control because of the cost, we can reply to the recommendation. It's not mandatory for the company to do everything recommended by them, but obviously you have to explain why we are not doing it. Detection risk that test will not reveal material incorrect amount. Detection risk is we are not able to detect it. Let's say companies usually follow sampling, so it's possible that they will not find the possible. So it's not 100% auditing. They can use documentation, they can use flow charts, interviews with the employees, they can do documentation. Sometimes they just observe how they are working and try to understand the things. Audit testing also they can do. Observe the functioning of quality control staff to ensure they are checking the output. Monitor the number of quality control failures as a proportion of good output. Let's say in the industry, the average is 1%, we are getting 1.5. So why it's the problem and how we can improve? Some things can be done through sampling. It will have its own risk. Non-sampling will have its own risk. Usually for the transaction, they will do the sampling unless it is computer assisted. We'll see in the next section. Analytical review also they can do. This is very easy. For example, we have to go only at, let's say, one warehouse. So what these auditors can do in DAISTRUK, they will see the numbers. Whenever they see some numbers are very weird, let's say number of people working are high and their output is very low. So we'll choose that one as the first one. Or maybe if you compare that to last year, all 5 warehouses have, let's say out of 5, 4 have shown steady growth, but one has shown the loss or gone down. So we can prioritize that. So basically this is the way to prioritize it, because there's a limitation of resource and time during the audits also. So they can use the ratios. Reporting, they have to do the objective, summary, result, opinion, recommendation, everything is part of the reporting. Now last section is about the audit of computer systems. Again, it has some advantage and disadvantage. Disadvantage can be, or problems can be, lack of primary records, encoded data. It's very difficult to understand. We have to decode it. Loss of audit trail can happen if there is any virus or if things got deleted. Overwriting of data management can do just to hide things. When it's actual, it's a different number. Just before the audit, they have changed the number. Program controls, they have to understand. Concentration of controls in the IT department. If IT department is involved, they can hide the file, then redo it. Lot of things can be done. So therefore, companies do round the computer audit most of the time. But nowadays, they have started through the computer also. So for this, the auditor need to have a very good amount of knowledge of the technology, the software they are using. For this, I'll just send you one YouTube. This is a 6-7 minute video, very good, where they're explaining computer assisted audit techniques. So basically, they are just making software which is very bespoke to the organization. It will test everything. The only problem is that software will be very expensive, and when it's very expensive, it's bespoke also. It's tailored to your own organization. It cannot be used to other organizations. And secondly, within our organization also, maybe next year or in coming years, the things will change. So it will be very costly to make it every time. But advantage is obviously it will be very, very effective compared to the around the computer. Okay. Benefits, weakness, everything is covered in that video. Yeah. That's it. I can show that now sharing screen, but I don't know if you're tired or not. You have 7 minutes, I can show, otherwise I'll send you the link. You can watch on your own.
I'm gonna have to drop off in a minute, so she can send it to me.
Okay, okay.
Thank you.
Yes. So that's it for today.